Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Hakim bin Ismail. In this video, my group would like to present about audit of revenue, and I will talk about introduction of this topic. First of all, we must understand that revenue can be recognized in accordance with the applicable financial reporting framework for an auditor to issue an unmodified opinion. The International Accounting Standard has already provide the criteria of revenue recognition. First, the entity has already transferred to the buyer the significant risk of and reward of the goods. Second, the revenue can be measured reliably. Third, the cost incurred or to be incurred can be measured reliably. There are three transactions that processed by the revenue process. First, the sale of goods or rendering the services by credit or cash. Second, the cash received from the customer payment in goods or services. Third, the good return from the customer in credit or cash. That's all from me. Thank you.
Hi, Assalamualaikum. I am Ni'im Atila. I would like to present about the type of documents and record. The documents and record normally contained in the revenue process. So there are a few types of documents and record. Firstly, the customer sales order. The customer sales order contains a quantity and type of products or services that ordered by the customer. Second, the credit approval form. Next, the open order report. The open order report is a report of customer orders for which processing has not been completed. Maybe it is because the item is out of stock or and on back order. But there are other documents in order, which is the shipping documents, sales invoices, customer statement, and account receivable subsidiary ledger. Next, we move to the major functions. It is the principal objective of the revenue process, which is the selling the entries, goods, or services as prices and terms that are consistent with management's policies. So there are a few functions in the revenue process, which is the first one is the order entry. The acceptance of customer order for goods and services into the system in accordance with management criteria. The second one is the credit authorization, the appropriate approval for customer order for credit worthiness. Next, the shipping and billing. For the shipping, it must have been authorized. And lastly, for the cash receipt, it has to be processed if the receipt of cash from the customers. Then there are the other functions in the major, such as the account receivable and also the general ledger. Next, we move to the key segregation of duties. One of the most important controls in any accounting system is proper segregation of duties. This is particularly important in the revenue process because of the potential for the fraud. Thank you.
So we next to the control risk assessment. It is about revenue process where auditor decided to follow a reliance strategy for the revenue process. To assess the control risk for revenue process, auditor must understand 5 components of internal control. The first one is control environment. Auditor should consider how the various control environment factors may affect the individual business process. The factors including general IT control. Second, the entity's risk assessment process. The risks include competition, rapid growth, and new technology. Third is control activities. The auditor identifies what control ensure that the assertion for transaction and events are being made. The fourth is information system and communication. Auditor can develop an understanding of the revenue process by conducting a walkthrough. It involves the auditor walking a transaction through accounting system and documenting. And the last is monitoring of control. It includes understanding how management assess the design and operation of control in the revenue process. So the next is control activities and test control of revenue transaction. It includes one or two possible control activities that management could implement to mitigate the risk. Thus, to help you understand the underlying concept, we will provide some specific example by assertion. The first is occurrence. All revenue and cash receipt transaction and events that have been recorded have occurred and pertain to the entity. Second, completeness. All revenue and cash receipt transaction and events that should have been recorded have been recorded. The third is authorization. All revenue and cash receipt transaction and events are properly authorized. The fourth is accuracy. Amount and other data relating to recorded revenue and cash receipt transaction and event have been recorded appropriately. The fifth is cut-off. All revenue and cash receipt transaction and events have been recorded in the correct accounting period. The sixth is classification. All revenue and cash receipt transaction and events have been recorded in the proper accounting. So the possible misstatement can occur if internal control does not operate effectively. The auditor will evaluate the control that will prevent or deter and correct such misstatement.
Hi, Assalamualaikum. My name is Aisyah binti Muhammad Zain. So I will proceed my presentation about control activities and tests of control that are relevant to revenue process. Okay, first one is occurrence of revenue transactions. So basically, auditors are concerned about occurrence accession for revenue transaction because clients are more to likely overstate sales than to understate them. So the auditor is concerned two major types of material misstatement, which is sale of fictitious customers and also recording of revenue when could have not been shipped or services have not been performed. So auditor needs to assure that all recorded revenue transactions are valid. Why auditors need to do that? Because they need to reduce the risk that revenue is recorded before goods are shipped or services are performed. So for the task of control is the auditor can observe and evaluate the segregation of duties. Okay, so next is completeness of revenue transactions. The major misstatement that concerns with both management and the auditor is that goods are shipped or services are performed and no revenue is recognized. Failure to recognize bermaksud customer tidak membuat apa-apa bill, which is bayaran lah untuk goods ataupun services, and the entity does not receive a payment. So maknanya tidak menerima apa-apa bayaran. So control activities that ensure that the completeness accession, what we call being met, include accounting for the numerous sequence of shipping document and set invoice. For the test of control, maybe the shipping document are matched to sales invoice. Then the auditor could select a sample of bills of lending and trace each one of it representative sales invoice and to the sales journal at unauthorized price. The rest one is like authorization of revenue transaction, and then accuracy of revenue transactions, and then cut off revenue transaction, and the last one is classification of revenue transaction. Okay, so next we move to cash receipt transaction. So first assertion is about the occurrence of cash receipt transaction. Mostly cash receipt recorded but not received a deposit. So what we need to do? Examples of control activity is you can use of electronic cash receipt transfer, and the examples of test of controls is examine application controls for electronic cash receipt transfer, or we can review of bank reconciliation for indication on independent review. Next is about the completeness of cash receipt. So mostly the possible misstatement is cash receipt received but deposit not recorded. Same contract activities, daily cash receipt reconcile with posting to accounts receivable subsidiary ledger. And for the test of control is some test of control like testing of the reconciliation of daily cash receipt with posting to account receivable subsidiary ledger. And the next one is authorization of cash receipt. So for the possible misstatement is cash discount not properly taken. So the control activity is entities producer specifying policies and control for cash discount. So for the test of control is review and testing of reconciliation. And for the cut off cash receipt, possible misstatement is like cash receipt recorded in wrong period. So what we need to do? So the control activity is cash receipt at before and after an accounting period reconcile to ensure recording in appropriate period. And for the test of control, need to review and testing of reconciliation.
Assalamualaikum, I'm Pramisa Wahid and I will be your next presenter for this chapter. Firstly, cut off cash receipt transaction and classification of cash receipt will be a possibility of cash being recorded in the wrong period or wrong statement. Next, auditing revenue related two categories of substantive procedure, substantive analytical procedure and test of details of classes of transaction, account receivable and disclosure. The first one, substantive analytical procedure, it is basically used in sales and cash receipt transaction and it is to determine the fairness of revenue related account. There will be three accounts, which is revenue, account receivable allowance for uncollectible account and bad debt expense, also sales receipt and allowance sales commission. Next, substantive test of transaction. There will be appearance, completeness, authorization and occupancy, cutoff and classification. For tests of detailed account balances, there will be existence, right and obligation, completeness and valuation, and also allocation. For tests of detail of disclosure, there will be accuracy and valuation. Lastly, for completeness, the auditor concern in this completeness is all account receivable being included in account receivable with subsidiary and general ledger of account receivable. Next, age trial balance. The procedure is first step and age trial balance is quoted and cost quoted, which means each column of trial balance is added and then column total needed to ensure the agreed amount balance for each selected account. For each selected customer account, the auditor needs to confirm the customer's balance and verify the amount. A good approach used for completeness is using CAATS. The auditor may use general audit software to check the accurate amount of each trial balance. Thank you.
For the cut-off assertion attempts to determine whether all revenue, transactions and related accounts receivable are recorded in the proper period. While the auditor can obtain assurance about the cut-off assertion for sales by conducting tests of controls, in most cases, cut-off tests are conducted by substantive tests of transactions or as a dual-purpose test. And a test of sales cut-off is straightforward. For the existence, The existence of accounts receivable is one of the more important assertions because the auditor wants assurance that this account balance is not overstated through the inclusion of fictitious customer accounts or amounts. Next, for the right and obligations, the auditor must determine whether the accounts receivable are owned by the entity because accounts receivable that have been sold should not be included in the entity's financial statement. For the valuation and allocation, the major valuation issue related to accounts receivable is concerned with the net realizable value of accounts receivable. The auditor is concerned with determining that the allowance for uncollectible accounts and thus bad debts expense is fairly stated. Next, for the classification. There are three classifications that we can conclude here, which is first, identifying and reclassifying any material credits contained in account receivables. 2. Segregating short-term and long-term receivables. And lastly, ensuring that different types of receivables are properly classified. For the other presentation and disclose assertions, disclose is important for accounts receivable and related accounts. While management is responsible for the financial statements, the auditor must ensure that all necessary disclosures are made. Next, we go to the confirmation process for account receivable. Confirmation is audit evidence that is a direct written response from a third party to the auditor in paper form or by electronic or other media. For the types of confirmations, there are two types of confirmations, which is positive and negative. Positive confirmations are generally used when the account's individual balances are large or if errors and anticipated because the control risk has been judged to be high. Negative confirmation requests that customers respond only when they disagree with the amount due to the client. Timing. Accounts receivable may be confirmed at an interim date or at year-end. The confirmation request should be sent soon after the end of accounting period in order to maximize the response rate. Lastly, confirmation procedures. The auditor must maintain control over the accounts receivable confirmations so as to minimize the possibility that direct communication between the customers and the auditor is biased by interception or alteration of the receivable confirmation by the entity.